Okay, let's get into the big picture of why Ayodeji Ebo, who is the Chief Executive Officer at Afrinvest Securities, is here in the studios with us. Good morning.
Good morning.
It's good to have you. A very lengthy conversation we had late yesterday night regarding the state of the market and why this question keeps recurring. Why the stock market is not a good barometer or a gauge of when you're looking into the economy.
Yes, interesting. Just to throw a few statistics into that, to look at figures. When you look at currently looking at Nigeria's GDP, market cap relative to GDP, you look at currently Nigeria is around 23%. And when you compare that market cap to GDP, when you compare that to South Africa, which is over 322% market cap relative to GDP, and you look at Kenya, Kenya too is over 20% market cap relative to GDP. So you wonder why the distortion. And when you want to also break it further to look at it by sector, you look at the agri sector, which contributes about 20% to GDP, that's about 19 trillion of the 85 trillion. But when you look at in terms of market cap, it's just slightly around 80 billion. Just Okomu Oil and the Okomu Oil and Presco that you have within that space. You look at telecoms. Telecoms around, I think, contributes around 9 trillion in terms of contribution to GDP. But if not for the discussion around the listing of MTN, there's really no telecoms no telco listed on the exchange. Even we look at in terms of even for broadcasting, it contributes around 2.6 trillion to GDP. But you look at in terms of just dark communication, which has about I think maybe 8 billion in terms of market cap. But we're looking at maybe channels will also turn that. Will come to the market and will be able to change that direction.
Difficult question if you're going to do valuation for Channels Television as a listed company. And I'm sure my CEO is listening to that conversation, what the value will be. But let's leave that a little bit later on. So that's a bit of it. But if we look at the critical sectors, so if we look at the stock exchange and the stock market, which we report on a daily basis, 56-year-old institution, as old as the country itself. In terms of independence, just started trading a year after independence, 1961. And we still don't see the critical oil and gas sector in terms of the upstream. And the telecoms, the big telcos, like you have MTN on the GSE or Econet Wireless on the Kenya Stock Exchange. Then we're looking at the critical agriculture sector as well. So the key question here is this. What does this sectoral analysis reveal of what we have and what we don't have?
Yes, I think what we also need to establish is, one, why, if this is an opportunity to raise, the capital markets provides opportunity or a platform to raise long-term capital, why are investors or companies not taking advantage of it?
Of going to the stock exchange.
Of going to the stock exchange to get long-term capital rather than use debt to grow your
theoretically
business.
Says to be cheap.
Be cheap.
Theoretically speaking.
Yes, theoretically speaking.
Capital market money is said to be cheap.
And again, because you are not obliged to pay dividend, and you have long-term capital, you can be able to plan and sustain your business over a long time compared to debt.
How come we don't have?
So when you look at
money is so cheap there, how come nobody's going there?
Yes, I think what the potential company that is looking at listing on the exchange will look at is the potential to raise capital, and that is why when you look at how the potential to raise capital, these companies, when you can't dissociate these companies from the economy. So when you look at in terms of the activity within the capital market, if you notice then in 2004, 2005, as a result of the significant improvement in the policy on bank consolidation, really triggered significant increase in the market cap of the company based on the activities, and most of these banks were able to raise capital to finance that bank consolidation in terms of raising their share capital. But you also look at, but when you look at the distortion that happened in 2005, the market was down. 2014, less than 10 years. That's confidence, so which ties to the economy. So if I know that if I need to raise 1 billion to finance my business, and I know I can't get it through the capital market, even if I list now, I really can't get that value that I'm looking for raising the capital, then there will be no incentive for me. I'd rather go for what I feel is sure, which is debt that I can close within a short period and sustain my business and inflow into my business. So that are some of those things that may be like a drawback for most companies from not taking that option of listing on the Nigerian Stock Exchange.
It's a very interesting conversation, and we're going to go back a little bit again. If you look at the nature of the big sectors we talk about, with the exception of the financial services, which are basically banks and insurance. Of course, we're done with the indigenization under the President Obasanjo's first term in office as a military man, right?
Yeah.
So we did indigenization, we privatized the banks, we allow Nigerians to take ownership of those banks. So we're done and good. First Bank, Union Bank, UBA, you know the big names back then. Yeah. And then in terms of the big industries, whether from industrial goods or consumer goods, we're all foreign companies. And the list is very long. SCOA, CFAO, Nestle, Cadbury, UACN, John Holt. We're all foreign companies, and a few of them are no longer in the market. Those who are existing, that we call the blue chips today, are still largely owned by foreign companies, the parent companies. So in terms of having a Nigerian stock market that is largely reflective of our own economy, we don't have it.
Yes, I also feel it may also be a, when we want to look at in terms of the culture. So there are a lot of Nigerian companies that are really, in terms of profitability, really doing very well, but are not willing to come to the exchange. Maybe as a result, they are wary of any dilution. And for companies to last beyond generation, they don't want to lose ownership.
Or so they don't want to lose the position that I'm the founder, chairman, CEO. So
exactly. So that sensitization also needs to be re-emphasized for company owners. You see what Dangote is doing, Dangote Group is doing now. So it's the company that you can say it's beyond Dangote. This company is being run by very sound management, and you can see the books of the company, the financials of the company. So you expect that this will last beyond even the Dangote,
Aliko
Dangote himself. So when you look at, there are some companies that are indigenous, and most of them, in terms of their profitability, in terms of business, they are doing quite very well. But for most of them, they prefer to be not to be within, for them to remain within the outside the radar. So for people not to track in terms of the kind of business they do, the types of profits that they make. So for most of them, I think it's also something that we need to also work on in terms of the culture, for them to see that listing is also to ensure that, one, you access long-term capital. Secondly, you ensure that your company lasts beyond your generation, can go 2-3 generations, which we hardly find in Nigeria. When you look at a lot of businesses in the 70s, in the 80s, most of them are no longer in existence, save for some of the UACN that were forced to list as a result of indigenization then in the 70s. So you hardly find any indigenous company that's lasted more than 30, 40 years on the Nigerian Stock Exchange.
Okay, we're going to come back after the break, Ayo, to talk about incentives. And this looks like, if the stock market is not a barometer of the economy, but does it reflect the economy? They're two different things. Very tricky question. Yeah. It's not a barometer, but does it reflect the kind of economy that we have? And that's what the conversation will be starting from when we come back after the break.